Morning traders, it's the 16th of March. We're Signal Centre talking bull. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, pretty good, mate. Not too bad at all.
Good.
Yeah, all right.
Good.
I'm not going to moan about my cold. A bit
Okay.
of man flu kicking in,
Or
mate.
your football team?
No, well, it's one of those things. I'm sort of like I'd got over that a couple of weeks ago.
Yeah, I think so as well. Okay, cool. So there's plenty going on in the markets, as I'm sure everybody's aware. Lots of headlines for us to get through today. Then we'll get stuck into the charts because there's been plenty of movement there as well, and try and help set you up for the day ahead. Obviously, a big day with the ECB press conference and interest rate decision later. So we'll do our best to cover as much of the headlines as possible. So let's get into them. First up, financial fears intensify again. That's why we've seen these big sell-offs in markets and volatile price action. After Wednesday's European Open, Credit Suisse announced that Saudi National Bank would not be increasing its stake in the bank. The news triggered fresh fears over the outlook for Credit Suisse, especially given the potential contagion effect from SVB. I mean, it really is a bit of a horror show on Credit Suisse. In fact, what we can quickly do here is bring up the chart. I was looking at a monthly chart of this absolute shocker of a share yesterday, and you can see here it's pretty nasty. I mean, this high is actually back in 2007. This was actually the banking crisis. So this is where they had an opportunity to sort themselves out, get themselves fixed, but they never did. And it's been a very steady downtrend ever since, with this capitulation happening at the moment. So that is causing a lot of worry. And the fresh slump in its share price is also potentially causing wider contagion effects within the European banks. And therefore, the sector is under heavy pressure. So pretty severe stuff. The ECB expectations have dipped as a result of all of this, and there was a sharp repricing of the ECB expectations, with the chances of a 50 basis point hike on Thursday now cut to around 20%. ECB member, or one of the ECB members, has also called for a maximum rate hike of 25 basis points. This was pretty much all priced in at 100%. That the ECB would be raising rates by 50 basis points. We've seen a similar thing with the Fed as well, but it's all been priced out of the market as these fears continue to grow. So the euro has slid as well. Lower yields and a sharp repricing from the ECB meant that the euro came under heavy selling pressure during the day, with heavy losses against the dollar and the yen. There's been a tentative relief, a bit of relief this morning, as the Swiss National Bank stated that it would provide emergency liquidity support to Credit Suisse with a 50 billion Swiss franc loan facility, and equities have regained some ground as a result of that.
It feels like just throwing good money after bad, doesn't it? Or bad money after bad.
Well, look at that chart. That's all you need to know, isn't it?
Let's print some more money and just give it to Credit Suisse. See if that helps.
Yeah, because they've done so well with it before.
Yeah, well, that's the thing, yeah.
Anyway. So US retail sales also edged lower yesterday. That triggered a bit more negativity. The US sales declined 0.4% for February, although that was in line with forecasts after a revised 3.2% jump in the previous month. Underlying sales also met expectations. The New York Manufacturing Index slid. It dipped sharply, actually, to minus 24.6 from minus 5.8 previously, much weaker than the consensus forecast of minus 8. There was also notably negative readings for new orders and production. The PPI inflation moderates. We saw the US producer prices decline 0.1% for February, compared with expectations of a 0.3% increase, and the annual increase slowing from 4.6%. To 4.6% from 5.7%. Again, well below the expectations, so some decent data there. The Fed expectations continue to fluctuate. There was a fresh shift in Fed funds pricing on Wednesday, with the most likely outcome now seen as no change in rates next week. There was a fresh shift on Thursday, with a 0.25% hike now seen as the most likely outcome. So it really is quite volatile out there in terms of what the rates are expected to do. The US 2-year yield briefly dipped to a 6-month low at 3.75% before a recovery to near 4%. The yen surged yesterday as well on contagion fears. The slide in the US and European yields, together with a sharp decline in equities, triggered fresh defensive support from the yen. The yen also lost some ground on Thursday in a very nervy trading. Oil slumped as well. That was at its lowest level for some time, sliding over 5% yesterday before a limited recovery. What was supposed to be one of the main events yesterday was the UK budget, but the reaction was very limited indeed. As far as the markets were concerned, the UK budget had little impact, with the slide in UK and global equities and risk aversion having a more substantial impact. The Australian jobs number was slightly stronger. The labour market recorded an employment increase of close to 65,000 for February. And today it's all about the ECB decision. They will announce their policy decision later on. Both decisions and press conference from ECB Lagarde will trigger further high levels of volatility. So the volatility is not subsiding. We're going to see more of that today, more than likely. As you can see from that list I've got on the screen, a lot of headlines today, more than we typically go through, which is around 5 or 6. So lots happening in the market and lots of potential fear that's being pushed through into markets and creating lots of volatility. So Steve, spent ages on those headlines there. Let's get stuck into some charts, shall we?
Yeah, why not? Let's look at Bitcoin. I really want to get on my soapbox and start shouting from the rooftops about how ridiculous everything is in the financial world. But let's talk about something a little bit more ridiculous: cryptocurrency. That is, we look at the daily chart, and we posted that shooting star candle. Like we talked about this yesterday. At the time we were talking about yesterday, Bitcoin was actually looking a little bit better than it ended up. It did sort of like sell off towards the end. Again, we look at Bitcoin now and it feels a little bit like a risk asset. Seems to have sort of like benefited from Silicon Valley Bank going to the wall, and the other banks that are sort of like having that domino effect and toppling, I suppose. It's now at some point to sort of like help it. It's seen as a safe haven cryptocurrency. Weird one. So anyway, yesterday wasn't a good day, and today its price action is starting to fight back. Let's take a look at the where we're going on the actual short-term charts. There's a lot of lines on here. Sorry, it's a bit messy. We've got just a brief summary for our chart. Impulsive move higher, looks to have topped out above the resistance level. You know, the big resistance level I always talk about in Bitcoin, 25,400. Managed to get above there, extend higher to 26,500 before turning around and falling backwards. Now, if you look at the hourly chart, again, you know the formation that I always look for, these head and shoulders formation. Something like that. So look for really this sort of level around about the 24,000 mark, as it needs to hold there. If it doesn't hold there, then I would firmly expect this to break the neckline and cascade lower. Next level of support, next real level of support, probably down around about the 20,000 mark. Again, really needs to break that 26,500 to sort of like give us some inkling of hope. But if we go back to, actually, I'll take you to the weekly chart. Really, that's the one. You can see this black line here, and you can see the sort of like vacuum there is between, well, I suppose you could say between 23,500 and 29,000. That is a bit of a vacuum area. So while we're here, there is a good opportunity. There's no real resistance until we get to 29,000. So great opportunity for Bitcoin to kick on upwards to retest that 29,000. Although as I said before, I'm very bearish of this over the longer term. You can see the makings of an inverse head and shoulders formation, so maybe a bottoming pattern. But I firmly believe that price action overall still has this impulsive move lower to play out. If you sort of like put the I think this is maybe the fourth wave correction before the fifth and final wave lower. Ethereum, taking a look at price action in here, we know that 1730 is the pivotal level in here, and we managed to break up above there on Tuesday, but ended up forming that shooting star candle, and then we've actually formed an evening star formation with yesterday's bearish candle. So that's looks like to have done it. Looks like it's done a job. The actual high we got out of there was 1784 before things turned lower. Further downside is expected on Ethereum as well. Ripple is really struggling to get above this downward trending resistance line, and yeah, breaking down through the support here. We redraw this support line here, this sort of triangle type formation, but I suppose really more focus would be on the wedge, the sort of like this wedge formation. But yeah, so if we look at support coming in really at 35.5 cents, break below there, should open up a potential move to 30 cents. So again, negative on XRP, and can't really see that doing anything else but can move lower over the medium term. Taking a look at gold. Gold had a little bit of a well, a decent day yesterday after really a nothing day on Tuesday. And if you think we've sort of like we've rallied from 1810, what sort of percentage rally have we had? Well, 7.5% rally almost, all the way up to the highs yesterday we hit at 1937, just short of the 1940 mark. Resistance coming in at 1960. That's the next level we're looking at. And the automated Elliott wave has been projecting this as the fifth and final move higher for a little while now. So that still has the potential to play out. 1960 resistance. Above that, obviously, we've got the all-time highs at 2075. We've got the swing high in March last year. So that's 12 months ago, up to 2070, just short of the all-time high. So looks like we potentially could have that same sort of move again. Yeah, if we do get like more bad news in the banking sector and the indices falling off, then the safe haven asset really I would go for would be gold rather than cryptos. Obviously, this is dollar based. You can compare gold price against other currencies as well. Obviously, the main reason that this is looking so hot at the moment is the dollar weakness. On silver, looks to have finished the fifth and final wave, and we're in an ABC correction. Obviously, we can see the shooting star from Wednesday, so yesterday's price action. So that looks a little bit more negative than gold. Gold outperforming on a percentage basis as well. We had a big sell-off in crude oil, as Joe mentioned in the headlines. Managed to break the support at 70.21, extended aggressively lower, and this impulsive move lower that we're seeing really looking for that fifth and final wave before maybe a sort of like pullback correction. Next level of support for me is all the way down at 61.50 to 62.50, and that's not far away now. So really has opened up the downside by taking out these previous support levels which have held. So 70.20 will now act as resistance on the WTI crude oil. Same sort of price action in Brent crude oil, obviously. No reason for them not to be. And the projection lower actually managed to eke out a move to 71.44, breaking that 75.26 level. That would have been a great gun-to-head trade yesterday. We sort of missed out on that one, especially with the oil inventories out as well. Natural gas, a little bit under pressure, still looking at this support level around about the $2.45 level, and below that 210. The measured move target for the head and shoulders formation is down at 135.5. That still looks on the cards, although this looks to be trying to form some form of base. But at the moment, all pressure on the energy sector, and natural gas, I expect, will follow. So let's take a look at the Forex, the dollar, and before we dive into the indices.
Okay, cool. Thank you, Steve. So looking at the dollar index yesterday, big move to the upside, as we can see here, highlighted by this big green candle that we posted. We do still have this wedge formation that we've been speaking about. We saw the break lower, but support found at 103.62, and we touched that again yesterday. We can see the wick of the candle did go below. It did make a marginal new low, but it was a very strong session yesterday. So with all of the volatility that we saw, there was money moving into the dollar index in the hopes that it would act as a safe haven. But we can also see that the upside was capped at the reverse side of this broken wedge. So that's quite interesting as well. We're on the back foot today, down by 0.5%. So really volatile trading at the moment. In terms of where the next sort of levels are, I've got a 38.2% fib level highlighted up here, and I've had it there for a while now. That's at 106.15. And just wondering whether or not this is actually in the process of trying to form a bottom. It's quite a sort of shallow one, but potentially some sort of inverse head and shoulders may be forming here, with these prices down here sort of forming the right shoulder, the neckline of which would be this high that we posted on the 8th of March. And if we can break through that, that may indicate that we've actually formed a little bit of a bottom in the dollar index and prices might start heading higher in the short term. If that does go on to complete, then the measured move of that target, of that bottom pattern, would indicate a move up to 110.95. So if that's going to play out, you would expect that would mean another vicious sell-off in the equity markets, because money will be flooding back into this as a safe haven. So that is one thing to keep on your radar for the time being. We're actually seeing similar sort of price action in euro US dollar, as we always do. We kind of see the flip side here of the dollar index chart. Big negative candle yesterday, as we can see. And we threatened to actually complete a head and shoulders top yesterday on the breakthrough support at 105.31. Came very close to piercing that level on a closing basis, but the bounce back within the last few hours of the session was pretty impressive. So we highlighted yesterday on the intraday charts that there was actually a gap on the charts, which was worthwhile having a look at. We can see there it's the blue line. It was also a 50% fib level. Had an arrow drawn on there because I expected it to get down to that level and maybe bounce. Put in an order at that point and got absolutely hosed. As you can see, the price just went through that level entirely. I also had another stab at the 78.6% fib level, so it wasn't a particularly great day for me. I thought about having a go at the third level because we saw a swing low here, but by that point I was so beaten up, I was like, no, I can't do that. And obviously that turned out to be a winner, which was very disappointing, but I did have a good win on Euro Stocks 50, so all in all, it was a positive day, but yeah, that was pretty disappointing. But we're now going to retest the reverse side of that broken gap. Whether or not that will act as resistance remains to be seen. But all in all, the euro US dollar pair on the daily chart is looking a little bit scary now with this potential head and shoulders top. If we break through 105.31, and today could well be the day because we've got the ECB announcement, any weakness that we see in euro or strength or dollar buying is going to send this lower and suggest that lower prices will be seen over the short to medium term. So very much on euro US dollar watch today. Let's see what happens there. Looking at cable. So we can see that there was a decent-ish pullback yesterday.
Just talking about that euro dollar. So we're talking about the rates, obviously, and the sort of like maybe the contemplating not being as aggressive with the rate cuts. Sorry, the rate hikes. So obviously that would negatively impact euro dollar if they don't go for what was expected, say, a week or so ago.
Yes, if they're raising rates, then that's positive for euro.
Yeah, euro.
If they're cutting rates back, it will be negative because people will be wanting to buy into riskier assets like FX markets. Equity markets, because they're cutting rates back, which means hopefully more people have more money in their pockets. But we've got this ongoing issue with inflation as well, which means it's not necessarily the case. So it's a bit of a mess, to be totally honest, Steve.
Okay.
So sterling US dollar. So we saw a breakout of a wedge here, potentially formed a double top, which never really followed through to the downside. So we eventually saw this breakout from the wedge. Had I traded this gap yesterday, then I would have had a much better time trading, because this actually worked out really nicely. There was the unfilled gap at 2029. We just marginally went below that. So providing I'd had a decent enough stop, I would have been able to run that and see a nice bounce as a result of the gap fill. So that actually worked out quite nicely. We can see also on the daily chart, there was a nice pullback to retest the broken wedge and fill that gap. So that actually worked out quite nicely, and indicating maybe that we'll see some further upside in the short term towards our next resistance level at 122.98. A couple of requests to look in around yen, because obviously that had a very big day yesterday as well. Safe haven asset buying in the Japanese yen. Let's take a look at sterling yen. So been speaking about this for a while. Ali's requested this on a few occasions, and hopefully I've been quite consistent in my view here, in that while it's below this downtrend resistance line, it is a case of looking to sell into strength. We've seen a couple of attempts at trying to break through this. You can see there's a few wicks here of the candles which would have maybe threatened that view. And obviously, had we bought a breakout on the daily basis or seen a breakout on the daily basis, then maybe that would have triggered further gains. But we haven't seen that. Every time we've poked our head above this downtrend line, it's resulted in selling pressure and prices moving lower. So yesterday, we actually posted a bearish outside candle, which means we engulfed all of the previous day's gains and the entire price action that we saw, and posted new lows on the session on a closing basis, and we are pushing lower once again today. So it looks as though it is still a case of selling into strength here. Where I'd be looking to target today, potentially a move to 161.86, which is the low of the candle that we posted on Tuesday. Look to see if that provides any resistance, and potentially target a move down to these areas down here between kind of 157 to 157.60. That would be my expectation on sterling Japanese yen today. Let's take a look at euro yen, see how that's shaping up. And again, a big bearish move yesterday, another bearish outside day. So we did potentially see some breakouts here. So on the breakout here that we've got on the 1st of March, that would have indicated that maybe prices would start to move higher. The pullbacks that we saw were generally limited to the reverse side of the broken trend line. We saw a close below that, a pretty punchy one on Friday, the 10th of March, and then further selling ensued. We can see that the rally that took place on Tuesday failed to get back above that line, and then yesterday we saw a really nasty candle. So again, for me, it's a case of selling into strength here, potentially targeting that low from the Tuesday session at 142.53 in anticipation of a further move lower towards these support areas around here, around 137.36 to 137.97. So looking pretty bearish there. There's not any other requests from what I can see on currencies. So let's just take a quick look at some others. So Aussie US dollar still appears to be trading in this kind of wedge. Maybe looked as though it was going to break out on Tuesday, but then reversed that yesterday with a bearish engulfing candle. So still looking for some support potentially to be found around 65.20 to 65.47. Let's take a look at dollar yen. So weakness here, we can see that the dollar couldn't keep pace with the gains that we saw yesterday in the Japanese yen. So we actually had a gap on the chart here, which appears as though it's been filled and prices have moved lower. So looking really for a pullback into this region here around 130.50. Just take a quick look at that gap actually on the intraday charts to see where that was. So the gap was there. It was at the close on Friday. Did we close that straight away? No, we didn't. So there's a tiny bit of gap space there on the initial retest that we saw on Sunday night. So we actually saw the gap filled on Wednesday at 8 a.m. And what a trade that would have been if you'd sold it there. Selling there, targeting a move back down to these lows, you pretty much would have nailed that. So I don't know if anybody was eagle-eyed enough to catch that, but that would have been a mega trade and a very good example of how gaps can work out quite nicely in financial markets. I mean, where I put my stop there is a bit of an arbitrary level, but yeah, really nice. Technically, very good. Okay, so Steve, let's move on to indices, shall we?
Yeah, let's take a look at indices. Looking at, let's look at FTSE first. Obviously, that's got a lot of financial influence as well. So with the banking sector under a lot of pressure, not surprising that this is getting absolutely hammered. Price action moved lower, stalled at where the mid-December lows were. That is 7,300, just around that level, and bounced back quite nicely all the way up to 7,400. So had a little bit of a relief rally towards the end of the day. Still under pressure. Still looks like the potential is for lower prices. And yeah, who knows where this can will slow down. Obviously, we've had a little bounce from this support here. 61.8% fib is down at 72.18. I remember we were talking about these levels last week, and they just seemed like so far away, and yet within sort of like 3-4 days, we're absolutely smashing through them. So really nothing really to sort of like, I mean, even now we're sort of below maybe where there's sort of interim resistance between the 74.60 and the 75.30 area. So even a bounce will run into a little bit of headwind on the FTSE chart. That's on the daily chart. Down below the cloud into bearish territory. There's a lot of lines here. Sorry about this. Let me just remove some because it does look a little bit confusing. I'll actually remove the cloud as well, which we're in the middle of at the moment. Yeah. This looks a bit better. So we've had the fifth final wave completion in Germany 40 or DAX, and we're into an ABC correction really smartly, really quickly into this ABC correction. And we're taking those levels out now. So potentially form that A dip, looking for a B wave correction higher before the more aggressive sell-off. If you look back, really, we've stalled at quite a decent level as well on the downside here. Let's turn that into support. Not that making it blue makes it a support level, it's just makes it easier to sort of like read these charts. Let me just get rid of that one as well. Yeah, so that was the level 14,676, stalled in front of there at 14,695 before that relief rally back up. And it's like a 250-point relief rally, so it's no mean feat either. Price action continued higher, got up to just short of 15,000. So I think for us, that's a great psychological level to keep an eye on. Let's put the line in there. And yeah, around about today's high, really needs to get back above that to give us some sort of relief. But again, we could be looking at just a short-term rally, dead cat bounce, whatever you want to call it, before the C wave leg lower. So under pressure on Germany 40 as well. This is the same as EU 50. Funny enough, me and Joe talked about this yesterday. This is the only thing I'm short of really, and been short of it for a while. Yesterday, as the show progressed, I sort of like took profit on it, but as Joe went into a gun to head trade idea on it, I think it was yesterday, I decided to get back in, so I'm still in this. Did get down to just above the 4,000 level. I'm looking at more maybe targeting a move towards the 3,800 level. That would be really where I'd like to sort of like take some profit, but this has still got maybe further to go. That's a nasty day yesterday, and we haven't really done anything today. We've been up and down a little bit, two-way price action, nothing really to write home about. But obviously, with the ECB out this afternoon, then this could sort of like lead to some volatility. On the Dow Jones US 30, we managed to eke out levels that we haven't seen since October last year. So I got to a low on here at 31,385 before that relief rally, but we're still, you know, pushing lower. Resistance now at the previous level of support, that's 32,440, but over the last week we haven't got anywhere near that. So further downside expected, support expected really to come in around about the 30,000 level downwards. 28,600 seems like a long way off, but you can see how these markets are moving at the moment. Nasdaq 100 has done okay. The tech sector has had some relief over the last few days, and we're up to levels obviously that we sort of like reached last Monday, and yeah, just slowing down a little bit. Hanging man candle yesterday, momentum slowing as it's approaching these higher levels, so really looking for this maybe to peter out as well. S&P bounced from support at 3807. That was the previous double bottom neckline, or going all the way back to October. So it just shows you, and you've got this plethora of sort of like price action that went on between December towards from the middle to the end of December and into January. So we've sort of given up everything. All the January rally we had and euphoria of 2023 is going to be different. It's all gone. And there's no way back by the looks of things. However, we have had a nice little bounce off 3807. Price action yesterday did look to try and retest that, but failed and bounced nicely towards the 3,900 level, but still under pressure. 4,000 seems to be the pivot level in that market there. That's about it on the indices, unless anyone else has requested anything. But yeah, let's move into the gun to head, which is very exciting because we're doing okay now, Joe. It feels like we've got our head back in the game.
Yeah, it feels that way. I think we were batting below our sort of typical average on these trades, which is around sort of 40% win rate. And I think we dipped under that for a period of time, but we appear to have had a bit of a reversion to the mean. which has been very helpful indeed. So just to reiterate what it is we do here for anybody new watching, Steve and I pick trade ideas live on the stream. We put these onto a live account. We risk 1% of our trading capital per trade. Each idea must have stops and targets and risk reward ratios better than 2 to 1. And we close these ideas out at 9 p.m. UK time unless the stops or the targets are reached. So in terms of the account balance, Steve, I think if you can bring that up on the screen, that started off at 2,000 at the start of 2023. So we are still down by around about 48 quid from where we started. But in the last couple of days, we've had some decent winners. So let's just have a quick refresh of what those were. So yesterday we were selling Euro Stocks 50. So we sold it as markets appeared to stall into this resistance yesterday, had a risk reward ratio of ended up being 2.77. So we hit target on that. Could have made a little bit more if we'd had a bit more of an aggressive target, but that looked to be the right level to go for. And that was a really nice win. And Steve was trading dollar CAD on a bit of a breakout yesterday. When we were speaking early on in the session, it was breaking through this short-term downtrend resistance. And if we click the play button, we can see it came very, very close to the target, Steve, before actually dipping just shy of that target, but still maintained just over a 1 hour or 1.5 hour win on that yesterday. So
yeah, I was angry though, Joe. I was
yeah, I
angry. I
bet
was
you
like
were.
watching it. I was thinking, go on, just go a little bit more, and it
Yeah,
didn't.
you had your target just above a 78.6. So if you're
I know.
just
That's
inside
just
of that,
it's because I just was trying to be a bit defensive on the risk.
yep.
So I put the risk, obviously the stop I placed below the swing low. And if I was a little bit more confident with the trade, could have placed the stop a little bit tighter. So my target would have been, my target really was that 61.8% fib. So it's a little bit lower
Right.
than that.
Right. Okay.
But I couldn't just, the risk reward wasn't there. On a 2-to-1 risk reward trade idea, I couldn't manage it. So I played a bit safe, and unfortunately, that's the way it goes.
It was a winner, Steve. We
It
can't
was a
argue
winner.
with that. We can't
Stop
complain.
moaning, Steve.
Yeah, you take what the market will give you. So let's come up with some new ideas today, shall we? So it's going to be a busy day. Obviously, we've got a lot of concerns and worries in the market at the moment. We've also got the ECB rate decision today, as well as a press conference. So what we're going to go for? Well, the one that was really looking quite interesting to me was Euro US dollar again. So yesterday it came perilously close to completing a head and shoulders top on the daily chart. Let's just get rid of this wedge for the time being and focus on what I'm talking about here, which is this potential head and shoulders top, which will complete on a breakthrough 105.31 on a closing basis. If that occurs, then we are likely to see further downside. So I think there's a bit of bearish pressure here on Euro US dollar. If the ECB are going to raise rates less than expected, then I think that will be negative for euro and would potentially spark a bit more of a sell-off here. But at the same time, if they do raise rates at a higher level, then we could see that the dollar buying steps back in because there'll be worries about markets potentially heading lower. So a bit of a mixed bag today, I think. But looking at the intraday charts, we've got an hourly chart here. The gap that I was trying to trade yesterday didn't work. It just completely severed through that level. But potentially it will act as a resistance on the reverse side. So that's what I'm trying to play with today and want to sell it at the current price, Steve, of 106.21, 22, somewhere around there.
Yeah.
With a stop loss at 106.62.
Yeah.
And targeting move down to 105.25.
Okay, about 2.25 to 1. Is
Yeah,
that right?
absolutely right. I mean, that's just to move down to the potential neckline again. Obviously, if it does pick up some speed on the downside, then it could really get going below there. So you may want to, if you're going to follow that idea, have a couple of targets on it. Maybe look for a breakdown. Maybe take some half off at that level if it gets there.
Yeah, I mean, it
Getting
seems
ahead
to
of
be
myself.
No, it seems to be stalling at around about the 50% retracement of yesterday's sell-off. So, yeah, looks pretty good, Joe.
Yeah, so let's just redraw that on actually because it's from the reverse side that I was looking at it. But yeah, pretty much into that 50% of that sell-off yesterday. And when you
Yeah,
get Marubozu candles, often that 50% level can be a pretty good area of resistance. So let's
yeah,
see what happens.
yeah. Well, you've sort of like not forced me into looking at the FX, but I think really there looks like some good opportunity in there. The one that Moch was asking about, the euro yen. Just has given me my gun to head trade idea. Looks like we're forming a bit of a bearish pennant here. So the measured move target for this, if it's confirmed, is a move down to 136. So it seems like a pretty good idea to me. So I'm going to go with that. And again, this is on the back of I think I'm looking for a little bit of a different target. What 38.24. So I wasn't sort of going to be quite as aggressive with mine on the measured move target, but why not? I could be a bit tighter on the stop. We're getting in. Where are we getting in? 141.08. Stop can be. I could be a bit more aggressive than that, surely, Steve. 68. Yeah, I'm going to go for this one, Joe. I'm going to have a quite a tight, aggressive stop. Should we go for 68 or 78? Let's go for 78. Yeah, something around there. So let's try and get the trade on before it starts moving about and collapsing because everyone's jumping in front of my trade idea. Looking at 1% risk on this. Let's move it over here. Getting it in at these levels, and the stop we're looking at 141.78, targeting a move to 138.25. 138.25. How about that? That gives us a 4.4 to 1. I don't mind that. What do you think, Joe?
Yeah, I'm happy with that.
Right, okay, let's go for it. Stevie O'Hare's going for a big humdinger today. Yeah, so I'm looking at the bearish flag. If it's sort of the other thing I was looking at on the daily chart, I looked at this bearish outside candle, really aggressive, breaking down. I think sort of the Ichimoku cloud breaking down through the cloud, getting into that negative territory. So see if that can continue, and really thinking about the ECB rates this afternoon, that they may pull back on expectations, which will lead to weaker euro. Also, the banking shenanigans that are going on with Credit Suisse looking likely to go to zero.
Yeah. Yeah.
I mean,
Okay.
we've said about this before, Joe, that you said they had a chance of doing something about it in 2008 or just after 2008, after the financial crisis, but I don't think these banks had any chance. I think, it's nailed in. It was nailed in then that they were all really, if you sort of took all the assets that they had on their books, they were wiped out. Companies would have been shut down for less if you had the auditors in there, but
Yeah.
they were given this lifeline. And they've been trying to sort of recover from that, but it's too big a chunk to recover from. So you have to let them go. Too big to fail, supposedly.
Yes, indeed. Okay, so day ahead. So we do have some US data due out today as well. The US Philly Fed Index and the US jobless claims, both out at 12:30, typically 1:30, but the clocks have changed in the US and we won't do that for another couple of weeks. So get used to these times being a little bit earlier than usual. In the European markets, we've got the ECB policy decision at 1:15 and then the ECB press conference at 1:45. So this is going to be the main event of the day, and they'll announce their policy decision. Both decision and press conference from Lagarde will trigger further high volatility. We have seen on the rate side of things some really big movements in the pricing of where rates are expected to be. So the Fed, which is due out next week, we are most likely going to see no change now. That is kind of where most of the percentage is suggesting that the prices are going to be. Will that impact the ECB? There's talk there that there may be a change in their rates as well. So yeah, we'll have to wait and see. So the expectation is now for a 50 basis point hike being cut to 20% chance. And one of the ECB members is calling for a maximum rate hike of 25 basis points. So it may be that we see no rate change today, or maybe 25 basis points. But anything above that, I think, would trigger some sharp reaction because there's only a 20% chance, according to market prices now, that we'll see a 50 basis point rate hike, which was pretty much set in stone this time last week. So yeah, interesting times ahead. Okay, let's wrap it up there, Steve, and await further volatility, and we'll do the debrief tomorrow.
Lovely. Cheers. Good luck, everyone.
Have a good day. Bye-bye.